Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate reports into something you can actually understand. Today we're diving into Greenidge Generation's latest quarterly report, and let's just say it's a bit like trying to mine for gold during a power outage. Full of potential, but maybe not so bright at the moment. This report covers the first 3 months of 2025, and the big story is a mixed bag of revenues, some financial maneuvering, and still navigating some murky legal waters. We'll break down the key financials, dissect what management is planning, and figure out what it all means for the future of this Bitcoin mining and power generation company. Before we get started, if you enjoy these clear and easy to understand explanations of corporate documents, make sure you subscribe to the channel. We also have a Discord community to discuss these topics with other savvy people, so check it out in the description. Alright, let's get into the numbers, starting with the balance sheet, which shows what the company owns and owes. First thing to notice is their cash. They had about $499 million in cash, including restricted cash at the end of March. That's down from $8.6 million at the end of the previous year, meaning their cash position is getting smaller. Then there's their digital assets, mostly Bitcoin, which came in at $8.4 million. Good news, it's up from almost $7 million at the end of the previous year. Bitcoin mining and the price of the coin are a major factor for them. Overall, their total assets were $56.7 million at the end of March. Back in December, their assets were almost $65 million. This means Greenidge's total assets decreased by about $8 million in just 3 months. Now, looking at the other side of the balance sheet, their total liabilities were almost $115 million. Back in December, it was about $120 million. So liabilities are also shrinking. That means Greenidge owes more than it owns, resulting in what's called a stockholders deficit, which we'll get to soon enough. Now, let's talk about the income statement, which shows how much money the company made and lost. Greenidge makes money from a few areas. First one is data center hosting, mining, and power. Their hosting revenue was about $5.8 million. That's down from $9.1 million in the same period last year. Their cryptocurrency mining revenue also dropped from $7 million to $4.2 million. But here's a bright spot. Their revenue from power and capacity sales jumped up to $9.2 million compared to just $3 million a year. This increase is helping offset some of the declines in other areas. When you add it all up, their total revenue was $19.2 million. Basically the same as the $19.3 million they made the same time last year. Operating expenses basically eat up all the revenue, however. After all the expenses, Greenidge reported an operating loss of about $2.4 million, larger than the $1.7 million loss from last year. After accounting for interest and other expenses, the company's net loss landed at $5.6 million, worse than the $3.9 million loss from a year ago. Breaking it down per share, they lost $0.42 per share compared to $0.22 CN last year. So while the total loss increased, the loss per share was lower thanks to an increase in the number of shares. To keep this simple, Greenidge spent more cash than it brought in. The report shows they used around $5.7 million in operating activities, which means they're burning through cash. They did manage to bring in almost $2 million in investing activities, which is likely from selling some Bitcoin. No money was made off issuing stock. They spent the $3.7 million and ended up decreasing total cash by roughly that amount. Now let's dig into the debt. Greenidge has a lot of it, and it's a key part of their story. They have these things called senior unsecured notes, which are basically IOUs that pay 8.5% interest. At the end of March, they owed $66.7 million on these notes, less than the almost $69 million from the end of the previous year. They're slowly decreasing this amount, but will it be enough to keep up with those debts? Now for some other important updates, first a major legal battle. The company is still fighting to renew their Title V air permit for the New York facility. This is a big deal because without this permit, they can't operate the power plant at that facility. The process has been a long back and forth, and it doesn't seem close to a conclusion. It should be noted that their Title V air permit comes up frequently as a major item for Greenidge. Now for events that happened after the end of the quarter and after the balance sheet. Greenidge made deals to swap shares of their stock for almost $6 Fifth tapped about earlier. This is their way of reducing debt, but it also means giving away more ownership of the company. They also issued 9,954 shares of their stock to Atlas, their controlling shareholder, to cover interest payments. Again, this is a way to avoid paying cash, but it dilutes the value of existing shares. So what's the overall story here? Greenidge is a company trying to navigate a tough environment. They're involved in Bitcoin mining, which is affected by crypto prices and mining difficulty, and they also sell power, which is exposed to the market. What makes this even more difficult is, in addition to general debts, they have environmental liabilities that make future capital allocation to those ventures questionable. Also, it looks like they will be improving their tax rate transparency in the coming years. Adds that all these efforts help with potential investors, but the clock is ticking down to 2026 for Greenidge. As for opportunities, Greenidge can capitalize on increasing electricity demand through more power sales and improvements to profitability as Bitcoin economics recover. To conclude, Greenidge is at a critical juncture. While some aspects of the business show promise, especially in power generation, their financial instability and upcoming debt deadlines cast a long shadow. Management's ability to turn operations profitable is paramount for the company to survive in its current form. Their continued efforts to deleverage are notable, but the market headwinds need to be recognized. What do you all think? Share your thoughts, and if this was useful, hitting that like button and consider subscribing. Also, check out our community Discord server, linked in the description below. Thanks for watching. See you next time.